Imagine for a moment thinking you're completely safe, secure, ready for anything.
Huh.
And then, bam, you get utterly blindsided. Something unexpected just changes everything.
Right. It's that turkey before Thanksgiving idea from Nassim Nicholas Taleb.
Exactly. That
Mhm.
poor turkey thinks life is great, getting fed every day, until it's suddenly not.
It's a powerful analogy, almost unsettling, really.
Yeah.
Shows how assumptions about, well, stability can just leave us totally unprepared.
Absolutely. And that's pretty much what happened to a lot of traditional banks. So today we're doing a deep dive.
Okay.
We're looking at how these unexpected tech shifts have just dramatically reshaped banking.
Yeah, the whole industry.
Our mission is to unpack Taleb's Black Swan concept,
Yeah.
and see how digitalization really became one for banks.
Creating that huge gap we see now between what customers expect and, frankly, what banks are delivering.
Right. And then, this is where it gets really interesting, I think. We'll look ahead. What's the next potential Black Swan? We're talking the AI revolution.
And what banks really need to do, not just to survive it, but to actually thrive, maybe even get stronger.
Exactly. Now, our insights for this, they come from a really great article. It's called The Black Swan of Digital Banking, How Tech Shifts Disrupt Finance.
By UXDA. They're banking UX strategists, right? Got tons of experience.
Over a decade, yeah.
Yeah.
And the piece, it just weaves together customer experience, financial insights, and Taleb's theory so well. Gives a really comprehensive view.
Sounds good. So maybe let's start with the basics. What exactly is a Black Swan event, according to Taleb?
Good idea. He nails it down with three main things.
Okay.
First, it's an outlier. Totally unexpected, like way outside normal predictions.
Right, not just a bit surprising, but properly out of the blue.
Yeah. Second, massive impact. It fundamentally changes the rules of the game.
Game-changing, literally.
And third, this is key, retrospective predictability.
The hindsight thing.
Exactly. After it happens, everyone comes up with explanations, makes it seem like it was obvious all along.
Yeah, we should have seen that coming.
Right. And here's the real kicker, the part that exposes our blind spots.
What's that?
Taleb argues we humans, and our institutions too, we're just wired to misjudge risk.
How so?
We look almost only at past experiences, at what we already know, which leaves us completely blind to these rare, huge game changers.
Like, we assume tomorrow is just a slightly different version of yesterday.
Precisely. And that leads us right into why digitalization was such a black swan for banking.
Okay, let's connect those dots.
Banks, their whole reason for being, stability, risk aversion. That's the core identity.
Makes sense. You want your bank to be safe, predictable.
But that very foundation, that strength, it ironically became their biggest weakness when digital disruption hit.
Wow, quite the paradox, isn't it?
It really is. Decades of stability, it seemed to breed this false sense of security.
Like they thought change would be slow, linear.
Yeah, maybe a gradual dip in branch visits, something manageable. What they didn't see coming was this exponential shift.
Flipping the whole model on its head.
Totally. And the real shock, it wasn't just the tech itself evolving.
No. What was it then?
It was realizing customers weren't comparing their bank to other banks anymore. Not at all.
Right. They were comparing the bank's app or website to everything else they use.
Exactly. Amazon's one-click, Apple's design, Google's speed, Uber's convenience, Netflix's personalization.
Suddenly the bar wasn't set by HSBC or Chase. It was set by Silicon Valley.
And when you look back now, the birth of the internet itself, the 2008 crisis, smartphones taking off, now Gen AI.
They all fit that Black Swan mold perfectly, don't they?
Absolutely. Events experts didn't fully grasp the impact of initially.
But in hindsight, they seem so obvious, so inevitable.
That's the retrospective predictability again. For decades, banks were all about branches, paper, face-to-face stuff.
Slow, methodical change, very controlled.
Then boom, this seismic shift. Smartphones, fast internet, cloud, crypto, open APIs.
And crucially, that wave of fintech startups after the 2008 crisis, right? They saw the opportunity.
They sure did. Suddenly, banking wasn't local anymore. It was global.
New players could scale worldwide without needing a single branch. Think PayPal, Chime, Square.
Revolut, Nubank, Wise. The list goes on. They just bypassed the whole physical thing.
The Revolut example is just staggering, isn't it? Founded 2015, over 60 million customers, 48 countries in like a decade.
Unimaginable for a traditional bank back then. Shows the speed.
And the smartphone was the catalyst, the real accelerant. iPhone in '07.
Yeah, but by the early 2010s, mobile banking was becoming mainstream.
Now, today it's dominant. What was the figure? 77% in the U.S. preferred digital channels.
Yeah, staggering. Completely eclipses branch usage.
But here's the head-scratcher part.
What's that?
How slow many traditional banks were to react.
Right. They kept building branches.
Unbelievably, yes. Banks in the U.S. were still adding branches up until 2009.
Even as smartphone use was exploding.
It took until, 2017 for them to close about 8% of locations. They were way behind the curve.
And that trend just kept going. It's the total now. Nearly 28,000 branches closed in the last decade.
Yeah, about 2,800 a year on average. It's massive.
Classic retrospective predictability, right? Hindsight says, of course the internet killed branches. But foresight
was lacking. And the biggest impact of all this digital shift, it completely reset what customers expect.
They're not just comparing banks anymore.
No, it's comparing the bank to the best digital experience they have, period, in any industry.
Which created this huge and widening gap between what people want and what most banks actually give them.
You'd think banks would have totally transformed by now, right? They've spent fortunes on digital transformation.
Launched apps, upgraded systems, hired designers, bought fintechs.
But customers often seem underwhelmed, still frustrated.
It's a real disconnect. Why is that?
Well, it seems many banks treated digitalization like a tech checklist. Tick the box, we have an app. Tick, we have a chatbot.
Rather than a deep, customer-focused reinvention.
Exactly. Just deploying tech without maybe fully understanding the why the core customer need. And that leads to this perception gap.
That study you mentioned, the Financial Brands one for 2025.
Yes, staggering numbers. 80% of bank execs think they deliver great CX.
But only 24% of customers agree. That's a 56-point gap.
Huge. And almost half the leaders, 47%, admit the gap is actually widening.
Widening, even with all the investment. So why? What's really going on?
Okay, several big reasons. First, like we said, misdirected digital strategy.
The checklist approach.
Right, investing in tech for tech's sake, like let's get a chatbot to show we do AI, but it doesn't actually solve a real problem well.
Or it creates new frustrations.
Exactly. 63% of leaders say they see no meaningful CX improvements from digital spend. 43% say the benefits don't even justify the costs.
Wow, it's like optimizing the wrong thing, bragging about shorter branch queues when people want to avoid branches entirely.
Precisely. Then there's the issue of generic experiences.
The sameness.
Yeah. So much reliance on white label platforms, copying competitors, it leads to this homogenization.
All the apps kind of look and feel the same. Forgettable.
Doesn't build loyalty, does it? Next up, the slow pace and inertia.
The banking bureaucracy.
Well, yeah. Customer expectations change fast, weekly even. But banks, updates take months, years sometimes.
Compared to consumer tech, rolling out updates constantly.
So banks are always playing catch-up, delivering features that already feel dated by launch.
And the last one, the big one, cultural and organizational barriers.
This is huge. Real change needs more than tech. It needs breaking down silos, empowering people.
A truly customer-first mindset, top to bottom.
But often, short-term sales targets or just ingrained risk aversion get in the way.
Employees probably see the problems.
Often they do, but they feel powerless to fix them within the existing structure.
So even with innovation labs and acquisitions, they were mostly reacting, not leading.
Seems that way, trying to patch things up rather than fundamentally rethinking. And then another jolt.
Right when they were trying to catch their breath, COVID-19 hits.
Another Black Swan, forcing the issue.
Yeah, it massively accelerated digital adoption, didn't it? Like a forced experiment.
Definitely. That Accenture study said it pushed banks' digital plans forward by maybe 5 years, almost overnight.
Forced transformation.
Look at video calls. Before 2020, only 15% used them with their bank. After, 46% were open to it instead of going to a branch. Big shift.
And the move away from cash to contactless, too. It just cemented digital as the primary channel.
So if digitalization was that slow-motion earthquake,
what's the next big one rumbling on the horizon?
Gotta be AI, right? Especially generative AI.
And it's not just a new interface, it's potentially redefining value itself in banking.
Absolutely. Now, AI isn't totally new in banking. Fraud detection, credit scoring, it's been there.
Behind the scenes, mostly.
Right. But ChatGPT launching in late 22, that was a real Sputnik moment, as the article calls it.
Yeah, suddenly millions saw how conversational, how creative AI could be.
And that changes expectations dramatically for banking. People will soon expect AI assistants to handle queries, do transactions by voice.
Offer real-time advice 24/7.
It's coming fast. Remember that report cited by UMass? Predicting AI could automate 90% of interactions by 2022.
Seems ambitious back then, but shows the direction, definitely, and the potential for hyper-personalization.
Huge. Banks have so much data. AI can finally unlock it for proactive, truly individual banking.
Like AI nudges. You've got extra cash, want to move it to savings.
Or changing your credit card rewards dynamically based on what you actually bought last month. That level of smart support.
Moving from reactive to proactive.
Exactly. And the efficiency gains for banks, they're potentially enormous.
That Business Insider estimate, saving banks $447 billion by 2023, maybe $1 trillion by 2030.
It's why 80% of execs say you have to embrace AI or fall behind, and 77% are already investing heavily in AI and data analytics.
The race is definitely on.
But what makes AI a true black swan isn't just the tech. It's the uncertainty, the who benefits most question.
Right, it's not guaranteed the big banks will win this round.
Could be the tech giants, Google, Apple, Amazon, Meta. They already have the AI chops and the users.
Or entirely new fintechs, built around AI from the ground up, leapfrogging everyone.
Or maybe specific use cases just explode. AI financial advisors making human ones niche.
Or self-driving money apps that manage everything automatically.
Sounds wild, but black swans often do. Until they're here, makes you feel like you're always looking over your shoulder.
And from the customer side, expectations are just going to soar again, aren't they?
Totally. Hyper-personalized, intelligent help working seamlessly in the background.
Loan approvals in seconds. Constant financial health checks.
Banking becomes less about transactions you initiate and more like an AI smart service working for you.
Of course, there are big challenges too. Privacy, bias in algorithms, errors.
Absolutely crucial concerns. But it's also an opportunity for banks to lead on ethical AI.
Combining efficiency with that trust factor they still hold.
And training staff becomes key, right? Not replacing them wholesale, but creating augmented employees who work with AI.
Preserving the human touch where it adds real value.
So if there's one big takeaway from the last decade,
It's that you can't be complacent. You can't just react.
the digital black swan proved that. And the AI revolution, it's likely to be faster, maybe even more disruptive.
So how do banks avoid being that turkey? How do they become, what does Taleb call it? Antifragile.
Yes, anti-fragile, that's the goal.
So what does that actually mean? Not just surviving shocks.
But actually getting stronger from them, embracing change, uncertainty, seeing it as an opportunity to evolve.
Okay, so how do they cultivate that? What are the strategies?
All right, 5 key things come to mind based on the article. First, cultivate an anti-fragile organization.
Learn from fintech, use flexible tech like APIs, cloud.
Empower agile teams, let them experiment, iterate, treat disruption as a chance to get better, not just something to defend against.
Makes sense. Second,
Obsess over customer experience and needs, like truly obsess.
solving real problems, delivering real value should be the North Star.
Deep user research, constant feedback, listen hard. Measure NPS, app ratings like their profit figures, and involve users in testing.
Got it. Third,
Differentiate, don't just digitize. Don't just have an app, have a remarkable app.
avoid those generic white label solutions. Stand out.
Use design strategically. Be the financial wellness bank or the fastest, simplest bank. Have a unique identity.
Okay. Fourth is AI, right?
Yep. Leverage AI wisely and ethically. Start experimenting now with customer-facing AI.
Advanced chatbots, personalized dashboards, AI financial planning.
But prioritize transparency, fight bias, protect privacy fiercely, and train staff as those augmented employees we mentioned. Keep the human touch.
Critical. And the last one,
Proactive risk management and resilience. Continuously look for vulnerabilities.
don't wait for the crisis. Stress test the business model. Ask, what if fintech takes 50% of our revenue?
Exactly. Invest heavily in cybersecurity, fail-safe recovery plans, build resilience before you meet it. COVID proved that.
So, wrapping up our deep dive today.
It's clear the digital revolution was a black swan for banking. Changed everything.
Radically reset customer expectations, and now AI is the next huge wave.
And that gap between customer expectations and bank reality, it's real and it seems to be growing.
But it's not all doom and gloom, is it?
No, definitely not. It's a critical moment, a juncture. Banks can see AI and digital as threats.
Or as massive opportunities to transform. The key is just, don't be the turkey.
Don't be complacent. Don't get blindsided.
The path forward seems clear then. Innovation, not just tradition, is the real currency now.
Learn from the past, truly embrace customer-centric design, and use tech not as the goal.
But as a bridge to better human connection, better value.
Right. In a world that's increasingly unpredictable, the future really belongs to the banks bold enough to rewrite the playbook.
To reimagine what banking even means and to move as fast as their customers do.
So maybe the final thought for everyone listening is, what does it look like for your own financial life? Not just digitized, but truly reimagined for this coming AI era?